Quality stocks in the South African market have been driven up to very, very high ratings in recent times, driven by the fact that many speculators and investors, they want to buy quality, and there's so little of it around that as a result, supply and demand has driven these things up to very, very high levels. I'm thinking particularly here of companies like Naspers, hugely quality stock, and I'm talking about the retailers as well specifically. Some of our favourites in the retail sector, even although the economic fundamentals for retailers generally not looking that great, would be Mr Price, ShopRite and Woolworths. Mr Price, I think, in a relatively lacklustre economy, benefiting from people down trading, getting fashion at a relatively cheap price. ShopRite getting an ever-increasing amount of its turnover and earnings coming from Africa, and the weak rand certainly helps there. And then, of course, Woolworths, very much in its own unique space. It's getting the emerging middle class spending more and more of its income on Woolies goods. That, I think, differentiates Woolies from just about any other retailer out there. As far as other sectors are concerned, we're still very, very negative on the construction sector, not convinced that the massive government spend that is being touted is actually finding its way into the construction sector, and unless until that happens, I think we'll remain fairly negative on that one. We're still relatively negative on the commodity stocks. As long as economic growth in China remains more subdued than it has been in recent years, I think commodity prices will stay under pressure. So it's perhaps not the time to get back into commodities just yet. And I think as far as the rand hedges are concerned, we're still very bullish on those, because we do believe that there is potential for the rand to go even lower even from current depressed levels. So stocks like BAT, SAB Miller, Aspen, Richmond all fit that bill. And although expensive, I think probably still have significant upside ahead.